I also wouldn't be surprised to see the 1700 level hit, which is the measured target of this breakout. I wouldn't be surprised to see that this year.
Trilogy Metals is a world-class developer in Alaska's Ambler mining district. The company already possesses 8 billion pounds of high-grade copper, 3 billion pounds of zinc, over 1 million gold equivalent ounces, and over 77 million pounds of cobalt. Trilogy's Arctic project boasts an after-tax net present value of $1.4 billion, with a 33% internal rate of return. Trilogy is led by an experienced management team with proven success in discovering and developing projects in Alaska. The company is well capitalized, has no debt, and possesses strong institutional support. Trilogy trades in New York and Toronto under the ticker TMQ. To learn more, go to trilogymetals.com. That's trilogymetals.com. Welcome back to Mining Stock Education, ladies and gentlemen. I'm Bill Powers, your host. Thanks for tuning in. If you'd like to engage the show, you can always reach me at bill@MiningStockEducation.com. And don't forget, the Sprott Conference is coming up in 3 weeks. If you're going to be there, you can shoot me a line, and I would like to meet you in person, shake your hand, and thank you for listening. Joining me today is the Junior Miner Junky, David Erfle. Gold, as we speak, is hovering around 1,400, which if you told most gold investors at the beginning of the year that it would be at 1,400 in the midst of the summer doldrums, most would be very ecstatic. I asked Dave on so he could share his thoughts about what's going on in the gold market and the junior gold sector. So with that being said, David, welcome back to Mining Stock Education.
Thanks for having me, Bill. Always great to talk to you.
Last week in your Kitco commentary, you talked about how you believe the macro background on the world stage has moved in gold's favor. Can you begin by sharing why you believe so?
Oh, sure. It's pretty much all about the global loose monetary policies that continue here with these central banks and the Fed joining in on that. At the end of the year, last year, we had the Fed raise rates in December, and then quite surprisingly, they started to backpedal and announce that they were not raising rates anymore. And then all of a sudden, during what is normally gold's slowest time of the year seasonally, they pretty much have informed the market that they're going to begin easing. So this is very good news for gold, as the negative yields give investors more incentive to hold gold as opposed to holding cash. So when the gold price has now broken out of this ceiling of 1375, which it held for nearly 6 years, this is a huge signal. And the huge signal has come, like I said, during a slow time of the year. So a lot of these fund managers and big money traders who are on vacation, some of them are still not involved in this sector. And when they left on their vacations, they had little to no exposure to this sector. So I still expect the junior market to start picking up more once these fund managers and big money traders return to their desks from their summer vacations.
Do you believe we're in a technically confirmed gold bull market now, going back to 2016?
Yes, once we had a monthly close above 1362, then the bull phase has been technically confirmed here. And what happened at the end of not only the month of June, but which was also a quarterly close, we had a monthly and quarterly close above $1,400 an ounce gold. So that's very bullish for the short to medium and long term here. So the only way I think this move becomes a false move is if the Fed starts to switch gears again and basically say, look, the economy's getting better, we're not gonna lower rates anymore. And I have a hard time seeing that, because the market's already priced in a 25 basis rate cut for July 31st. And they've also priced in a 50% chance of at least 3 rate cuts this year. But the strong jobs report on Friday basically took a 50 basis point cut off the table for July 31st. So what I see here happening is a consolidation here above 1350, 1375. I think that's a pretty strong base right now, unless the Fed changes its tune again.
And if we break down past below that 1350, Is there anything we should be worried about at that point?
Oh, absolutely. There would be a lot to be worried about because that would be a false breakout, which is not good. So I would have to reassess my long-term holding position at that point if I see that possibility coming into being here.
And then where do you see above 1400? We got up to 1440. Where do you see the next key resistant point above 1400, 1440?
Well, gold broke down around the 1500, 1550 level. So I wouldn't be surprised to see the gold price run towards that area pretty quickly if the Fed continues to remain dovish here. I wouldn't be surprised to see that happen pretty quickly. I also wouldn't be surprised to see the 1700 level hit, which is the measured target of this breakout. I wouldn't be surprised to see that this year.
That would be quite astounding if we got up to 1700 this year.
Yeah. I mean, that'd be wonderful for all of us long-suffering gold investors, because that it's the last few years have been very frustrating for speculators, and this is the reason why a lot of these juniors haven't moved much. That combined with what I said earlier about fund managers and big money traders, still a lot of them being on vacation here in the summer.
Yeah, some of these juniors, as I've kind of observed how they're reacting to the increase in the gold price, it's kind of seems like you're taking those electric shocks to the chest of a dead corpse, trying to resurrect some of these juniors. What is your commentary on the price action and the shares of some of these junior miners?
Oh yeah, it's in my experience, this is normal when you have a big up leg that's about to begin, and what I feel has already begun in this sector. The money flows first into the majors and into the royalty firms, and then it starts to trickle down the food chain into the juniors later on. And like I said, this time it's even more magnified because a lot of these speculators are gun shy. They've been burned so many times. We've rushed up to that 1350, 1375 ceiling so many times, and they've been burned so much. And also, a lot of them have moved on to other sectors. Now that the miners are competing with not only crypto, which is a highly volatile sector, but also the cannabis sector. So the miners used to be pretty much the Wild West and the only game in town as far as high risk, high reward. But now they're battling with the cryptocurrencies and the cannabis stocks. So a lot of those investors have moved on. So they're going to need to be convinced that gold has a $1,400 floor before many of them come back into this sector.
Some of the ones that have not moved have been a lot of the exploration stocks. Are there any names out there that you're looking at that you're saying this is a good value right now?
Well, yeah. I mean, fortunately for myself and hopefully my subscribers that followed me, I pretty much went all in to the sector with my with my minor investment capital at the first week of June, end of May. So we have full positions now in all of our companies, and now we're just waiting to see how far this impulse move goes. And like I said, we're also waiting to see if that 1350, 1375 area holds. And I think, like I said, it's mostly based on Fed policy here. All the other macro situations are in line here for gold to really do well, but the Fed has to remain on board and begin to lower rates here. So as far as the value is concerned in the sector, like you said, a lot of these exploration companies, development stories have yet to move. But in my experience, I find it best not to trade after you've had that breakout if you've already got full positions in all these companies, because once these traders and these big money players come back into the sector, they're going to be looking for value, and there's still a lot of value out there. So you don't want to be early on a stock, and just because it hasn't moved yet doesn't mean it's not going to move later. So I'd hate to sell something that is yet to move to buy something that already has, meaning I'd be chasing it. So, like I said, I've learned from experience in the past. This is my third major up leg, for third or fourth. I lost count. I've been in this sector for about 17 years. It's been a grind. It's been a lot of fun, but it's been a grind also. And if you're fortunate enough to have, full positions in all the companies that you like, and right now I have full positions in 25 companies. So basically, I have my own little mutual fund, and I would like to keep all these positions and not do very much trading until I feel this next up leg is matured, which I don't think is gonna be until the GDX hits at least 45, and it's trading at about 25 right now, and it got up to 30 the last when we had that basically short covering induced move in 2016, which got overextended. So it's starting to consolidate right now. It's consolidating between 2450 and 26, and I think if the gold price remains above 1400, Powell has his meeting at a semi-annual meeting with Congress on Wednesday and Thursday this week. So if he spooks the market into thinking that they're not going to raise rates, then the whole story is different. But if he continues to convince the market that they're going to need to ease, then I would not be surprised to see the GDX shoot to 30 pretty quickly.
We'll be right back after this word from our sponsor. Orin Resources is a junior exploration company with the appetite of a major, focused on finding the next globally significant discovery to create enormous potential upside for shareholders. It's one of the most aggressive exploration companies pursuing high-grade, scalable gold and copper deposits, and has a premier 7-project portfolio including its 2 flagships, Committee Bay in the Arctic and Sombrero in Peru. With Orin's unparalleled technical team and highly experienced management with a history of success in advancing and monetizing exploration assets, Orin has been called one of the best in the junior exploration sector. Orin trades on the TSX and NYSE under the ticker AUG. To learn more, go to aurinresources.com. That's AURYN resources.com. I wasn't expecting you. I'm still kind of processing when you said 1700 gold possibly this year, because you're more conservative, and even when I've talked to you, you've told me, Bill, watch out for this. If we break this resistance, it's going down to 1100. So I wasn't expecting you to say 1700. And as I'm sitting here thinking, I was reminiscing back to 2016 when Silvercrest Metals had that discovery. It was a spin out company, and they were trading at 8 cents. And I remember looking at it back then. And then the discovery with the rising gold and silver prices, it went up 40-fold. 40 times in 8 months, and that's why we do this, right, Dave? I mean, you're looking
right.
You're stacked with explorers, and if you get $1,700 gold and 1 or 2 of your companies hit something big, you're going to do really well.
Exactly, and the situation that you brought up, Silvercrest, that was a perfect situation. You had a seasoned management team that the market respected. You had a tight share structure, and you had a really good project. So, like you said, all it takes is a few, and you could do really well. But the reason why I was cautious before is because we didn't have a confirmed breakout. We've been building a base for nearly 6 years now. So when you have a base that's been built for that long and you have a breakout out of that base, technicians know, and seasoned market professionals know, especially in this sector, they know that the bigger the base, the bigger the move higher out of that base. And if you, like I said earlier, if you're fortunate to have completed positions while this base is forming and right before it breaks out, you want to limit your trading. You want to let the market make money for you, because most of the hard work has been done in accumulating these positions over the past few years, especially. So once your hard work is finished in accumulating these things before the breakout, if you're fortunate enough to do it right before the breakout, then after the breakout, you want to make sure that you limit your trading and let the market do your work for you.
Is there any insider buying that you're observing in the junior gold sector right now of significance?
Well, there is a few. There is one company that I hold that is not a gold explorer or developer. They're a zinc developer, and they have a very trusted name, and they have considerable insider buying lately, and that's a Cisco Metals. They have two large zinc projects in Canada, and they're both very large land packages, district scale potential, and the company has a lot of cash, and the management has been steadily buying for the past 6 months. The stock has really gone nowhere based on the zinc price, and the zinc price has gone nowhere based on the U.S.-China ongoing trade war. But zinc inventories are really low, and the trade war isn't going to last forever. And if you're going to speculate in zinc, you're going to want to do it with a trusted name that has a really good cash position. It has really good high margin projects that are contained in district scale land packages, and that is a Cisco Metals.
A prominent investor, of course, is Eric Sprott, and he's made some public investments. I even read recently when he makes an investment, several of the companies will even mention his name in their press release. And trending on Twitter amongst junior miner speculators is even hashtag SprottWatch. What's your observation with Eric Sprott or somebody like that? When you see somebody like that go into a stock, what does that do for you in terms of your perception of the companies that he invests in?
Well, as far as Eric Sprott's concerned, it's you have to be careful because he's in so many different companies, and during the last bull market, it kind of bit the bull market in the butt when he pretty much takes a shotgun approach to investing in these things. He invested a lot of them, and it turned out to be a detriment during the bear market last year, and it kind of made it worse because he had to divest a lot of these companies. So when he was divesting, it magnified the bear market. It magnified the bull market when he was buying them, and then it turned out to be a detriment on the downside. So Eric Sprott, I'm not saying that he doesn't know what he's doing. He's a very hands-on, highly intelligent mining investor and company builder, and he's done very well in many companies. But all I'm saying is, don't just take his buying a company as your only reason for buying it as well.
Yeah, and I always like to remind people too, when he puts 25 million into an investment, that's a small fraction of his net worth. Whereas that
Right.
seems like a large number to me. To him, it
Exactly.
isn't.
That's lunch money to him.
Yep,
So,
exactly.
yeah, and also, when you hear people like Rick Rules say, I've been down 50 to 75% on speculations, and they've turned around and made me, multi-baggers. Well, these are guys that can afford to sit on what is an investment they got in too early on. Whereas us smaller investor speculators, we have to keep our money working. We don't have, we can't have too many losers sitting there waiting for them to come back.
Yeah.
So when the market is in a bear phase and you're doing your accumulation, you just have to be very careful on which ones you buy.
Dave, as we conclude here, you recently were on a site tour for Cartier Resources. I have a question about what you look for when you go on a site tour, more so than the company-specific tour you were just on. What do you look for as a private investor that self-directs your investments that you're not going to be able to find on the company PowerPoint presentation on the website, or not going to be able to ascertain by talking to the management, whether it be over the phone or in person at a conference? What are the specific things you look for on a site tour?
Well, Bill, you picked a really great example in asking me that question, because Cartier Resources is a company that I went on the site visit, and I was really what you want to see in a smaller company like that is you want to see that management is taking care of the of the shareholders' money. In other words, you want to make sure that most of that money is going into the ground. You want to make sure that they have a smallest amount of employees that they're getting the most out of. Mm-hmm. And this is a great example with Cartier Resources. I walked into that office and it was meticulous. And the presentation that they gave was very detailed. Everything was organized. They went over every drill hole, what their thinking was, what they were looking for, what surprises they had, what surprises they didn't have. Because I'm very meticulous and detail oriented as well. And when I see that in a junior company, it really excites me because I know these people really care about the shareholders' money. I know they really care about what they're doing. They have a lot of their own money in the company. This is a company that did the right things at the right time. They went and found these projects during a brutal bear market. They got them for pennies on the dollar, and I know that every single dime that they get from shareholders, they're getting the most out of, and they prove that to me with their site visit. When I see something like that really gets me excited in the company because I know these people really know what they're doing. They're honest, and they're doing everything they can for their shareholders.
David's site is the JuniorMinerJunky.com. You can go there and get his latest interviews, which he posts, sign up for his free newsletter. And if you need help navigating the junior mining sector, David offers a paid-for subscription service where you get to look over his shoulder to see what he's buying and selling. I am a subscriber to that newsletter, and it's of great benefit to me. Well, Dave, thanks for coming on Mining Stock Education. I always like hearing your insights.
Thank you, Bill. Thanks for having me. I always love coming on the show.
This episode of Mining Stock Education is brought to you by U.S. Gold Corp. U.S. Gold Corp is a U.S.-focused gold exploration and development company advancing high-potential projects in Wyoming and Nevada. U.S. Gold Corp has consolidated a district on Nevada's productive Cortez Trend and is advancing the Copper King project towards production in Wyoming. Led by a team of prolific company builders and renowned explorers, including Dave Mathewson, who's directly responsible for several major Nevada gold discoveries, U.S. Gold Corp is well-financed and has an extremely tight share structure with less than 20 million shares outstanding, and it trades on a major stock exchange, the NASDAQ, under the ticker USAU. To learn more, go to usgoldcorp.gold. That's usgoldcorp.gold. Thank you for listening to this Mining Stock Education podcast. Please subscribe and share with like-minded investors. Visit us on the web at MiningStockEducation.com for more resources on precious metals and natural resource investing. At our website, you can also sign up for our free newsletter for interview transcripts, stock picks, and more.